Bitcoin is off to a strong start this week, with the world's largest digital asset trading above $30,000. Let's dive into the crypto markets with Arca head of research, Katie Talati. Welcome, Katie.
Thanks for having me, Lawrence.
Glad to see you again. So we had, of course, this ETF filing announcement. Of course, it's not an approval. Nonetheless, the names that were on it were big: BlackRock, Coinbase. It was an all-star cast. Do you think that this kind of optimism will continue as we go on?
I think it will. I think the market has definitely really latched onto this new narrative for digital assets broadly, and of course for Bitcoin. I think the bigger problem is that most people don't realize that this ETF approval is going to be a while away if it happens. While BlackRock has a great record, the SEC has made it very clear that they don't want a Bitcoin ETF. They've taken a very strong anti-crypto stance as of late, and so it's kind of hard to tell what the outcome is going to be. There is the potential, though, that there could be some more kind of pressure on regulators to kind of approve this vehicle, just because it is being sponsored by BlackRock. I do think what also was super positive was seeing that, Wisdom Tree and other kind of asset managers from the traditional world followed on filing their own ETFs, which I do think is promising for kind of like the, down the road in terms of having access to the asset class.
Although those other characters were previously rejected, they had issues themselves. We're looking now to, this is the end of the month, and we, of course, have the options expiring on Friday. It seems 30,000 is the mark that most of the options markets are right now gravitating towards. Do you think that we're going to hold that basically because of the sizable amount of options that are right now there, plus the increase in futures contracts that have been taken on over the past week, as part of the excitement that at least 30,000 will hold, if not towards the end of the week, go forward the next few weeks after?
Yeah, well, I always say I never make price predictions. This market is very unpredictable. I think 30,000 is a key level that people have been eyeing for a while. The fact that we broke it is, been very positive for Bitcoin. But I can't say for sure if, we're going to hold it until the end of the week. I would note, though, that, the futures and options markets have been very active. Not only is June 30th on a Friday, it is also the end of the month and the end of the quarter.
Yep. So it's going to be an exciting time.
Mm-hmm.
Katie, you said the ETF could be a while away. What's a while in your opinion? How long do you think this is going to take?
So I believe when we looked into it, I know the SEC, I believe they have a comment period of 45 days, but they could basically kick the can down the road, which is kind of what they did with the last set of ETF filings. I think they were all done in 2019 and 2020. And everybody, I remember, kept being like, oh yeah, the next date for the SEC to say something on this ETF is coming. And so basically, I think all in the process allows them around 200 days to either reject or accept the ETF. And then they have to give comments, obviously, if they reject it. So that's what I meant by about a while away. 200 days doesn't sound that long, but it's, more than half a year from now. So, if we do get kind of any type of an approval, I would expect it probably to be around next year.
Let's move off to Ether now. You noted that last week a developer proposal in Ethereum included changes to Ethereum's maximum validator balance from 32 ETH to over 2,000. What do you think this means for the price of ETH?
So this really shouldn't have an effect on the price of ETH necessarily. The proposal specifically is kind of aimed at increasing network throughput and kind of efficiency on the network right now. So the way that Ethereum works is that because we have a proof of stake blockchain, validators are only able, or anybody who's running any type of node on the network, you need a minimum and a maximum of 32 ETH. If you stake more than 32 ETH per node, you're not going to earn any additional rewards on top of that. That was purposely kind of a parameter put in place in order to kind of increase decentralization, which a lot of people were for at the time. Now what's happened, right, is that we've had a lot of staking pool providers basically running and setting up nodes And because of that, they're staking a large majority of the Ether that's being staked on the network. For example, Rocket Pool, Lido, Coinbase, they all have these staking programs. And it's kind of inefficient that they are running thousands of nodes themselves when it's all the same entity. And it's basically kind of slowing down the network. So developers have been toying with the idea of increasing that maximum Ether staked amount in order for those kind of specific players to be able to just combine their Ether and have like faster confirmation and faster communication between nodes.
What are the odds it gets approved? It seems like a long shot.
It is a long shot. Obviously, there's a lot of debate involved, right? Because, most people are like, well, why would we have allowed these pool providers in the first place to gain such dominance? A lot of people are like, well, this is counter to decentralization. And this is kind of like the age-old debate that we end up having with smart contract platforms is like, you have a trade-off of decentralization versus speed at the end of the day. If you look at the really fast networks, it's the ones that use delegated proof of stake. So they have, they end up having these, 21 usually node operators, and people delegate to those specific nodes how much what they want staked. And as a result, there's only 21 nodes. So the network runs super fast. But they're not considered as decentralized as, say, Ethereum, which has thousands and thousands of nodes on like a more vast network.
Katie, thank you very much for joining us this morning.
You're welcome.
That was Arca Head of Research, Katie Talati.